Welcome to a special edition of Buy, Hold, Sell. Today we're talking retail with two people who know retail very well. We have Roger Montgomery from the Montgomery Fund and Don Williams from Platypus. First stock that we're looking at today is a former blue chip that's fallen on hard times. It's had a recent review in the share price, operational review that is, and the share price has reacted poorly. Don, we're talking Woolworths. What's your view?
We're still very negative on Woolworths, and there's a couple of reasons for that. They continue to cede market share to Coles, and we don't see that ending anytime soon. They obviously had a big miss over Christmas, which is very unlike a strong management team. And also when you look at how they've allocated capital to a hardware business that probably has less than a 50% chance of surviving. We think Woolies is in a void for at least another maybe year or two.
Do you also think they've lost their mojo? It's a long way back, Rog.
I agree with everything that Don said. The bigger issue for us is that this is a permanent change in the outlook for the business, and it comes not from Coles, it comes from Aldi. Before Christmas we had a conversation with Paul Foley, who was the ex-CEO of Aldi in the UK for over 20 years, and he outlined the strategy of Aldi around the world. It sent shivers up our spine. They operate on 2% margins. Woolworths operates on an 8% margin, or it has up to date. Wherever Aldi has entered a market, the incumbents have seen their margins absolutely collapse. I'll give you a quick reason why. Woolies and Coles separately have probably 30 different SKUs of tomato sauce, different size bottles, soft bottles, hard glass, and so on. Aldi has one. Because of that, Aldi have more buying power for that one bottle of tomato sauce than Woolies and Coles combined, and because they can buy that product cheaper than Woolies and Coles, they can have less staff. And in a country where salaries
pass it on cheaper to the customer,
and they only enter countries where the salaries are very, very high, and because that means something for their margins. So I think we're seeing a permanent change in the outlook for margins for Woolworths, and everywhere in the world that Aldi has entered, margins have come down. It's going to happen for Woolies as well. I don't think it's a blue chip anymore.
Good for customers, bad for Woolworths.
Correct.
Okay, well let's switch to general retailing, and another company that's done it very hard and lost their team of managers in recent times is Myer. Have you got a view on Myer?
Yeah, Myer's uninvestable as well. I mean, they haven't had a good year ever since they came back onto the ASX. The format is challenged globally, and clearly they haven't done enough to reorganise their products to make it appealing to customers.
So avoid?
It's a sell.
A sell.
Oh, I agree with that.
You've liked Myer in the past?
No, never. Not since the day it floated, Matthew. You'd know that. Wrote some pretty scathing stuff about the prospectus when that was out. This is a business that's no longer relevant to its customers. What does it offer, and why do people go there? The primary reason why, the primary way to sell product to customers, to be relevant to them and to give them the reason to come to your stores. There's just so many better alternatives out there for customers. I don't see how they'll make themselves relevant anymore.
I bought my shoes there, so I'm probably irrelevant as well.
Yeah, talk to your kids.
So there you have it, two fallen angels in the retail sector that don't look like they're going to come back anytime soon. Thank you.